Hi, everybody. This is David Skarica, wearing my Bahamas t-shirt. And I'm with Steve Whitaker. He's a subscriber of mine. So this is a new series thing that I wanted to do because my newsletter, I think, is a little, or publication is a little different than others, is that I'm very interactive, especially with lifetime members. And, I have a trading service where on top of like doing stock deals, the private placements, we also trade options and get in and out of short-term trades and stocks. And we have a little group right now where we're like about short selling as well. And I am very interactive with a lot of my subscribers. And I started this because actually the people that I'm interactive with tend to be the ones who have the best performance in their portfolios because they can ask me questions. They can also act on their own like volition, like they can act on themselves. And that's always been one my problem. I was telling Steve off camera is that like you have these stock gumshoes and these nonsense sites where people do reviews, and like I remember my old newsletter actually didn't have good reviews on there, but it's because people I think want you to hold their hands all the time, and I like when people are independent, thinking I'm just giving out ideas and then they can do what they want with the ideas. Like if I do an option trade, maybe they'll do a different strike price and or maybe they'll do a straddle rather than just going puts or calls. Like that's what I like when people can do that, because I know I've had trades I'm out of and Steve will write me like, "Oh man, this thing's doing great." And or oh my God, this thing did terrible. No wonder you got out of it. And he's done very well this year. And granted, it's a bit of a pigs flying situation because gold has finally, but we were positioned. We have to say we didn't just jump on the last month or so. And so obviously the gold stocks going higher, that when we had a lot of precious metal stocks that helped. But also, like I think Steve can tell you if you want to elaborate on what we've done. Like I don't mind talking about positions on my free part of the newsletter if I'm out. So I've had stuff like American Eagle and Fubo and GoPro, stocks like these that have done really well market wise. Stocks have gone up 50, 100% in just a few months' time. I think Fubo actually went three or 400%. And I know Steve was in a lot of these positions. And actually, that nice thing I like about you, Steve, too, as well, is you're not just a precious metals bug. So you actually kind of do like I said, these trades that I just talked about that are obviously non-precious metal trades.
Yeah, sure. Which that's what I like about your service because historically, when I found your service quite a long time ago now, I've got to admit, you were being touted by others as being a precious metals guy. But then when I
Yeah.
looked into what you'd actually done, you actually did all sorts of stuff, even like 10, 15 years ago. And it wasn't just that. And some of the trades you mentioned, fantastic trades, not in the precious metals either.
Well,
Best trades this year, Fubo, for instance, was
yeah.
unreal. And they went up massively. I think my call I had two sets of calls, and set went up 700% profit in one day, and then the other lot was 600% profit. It was like ridiculous. And I was in the stock anyway, and that went up something like twice, two or three times from where you got us in.
Yeah, yeah.
Which was, and that's just a typical stock, I think, that you look for,
Yeah,
a
yeah,
maximum
and I made
pessimism
about
trade.
I made about 5 or 600% on the Fubo calls myself, and yeah, I think I was in and out of the stock, but I think my average price ended up being about a buck 40, and
Yeah,
it went to I think when it went to $5, $6, that's when I got out. So it was
yeah,
about 3, 4x gain. So yeah, and like that's kind of my philosophy too when I'm looking for these, because you can find a lot of cheap companies, but you need a catalyst. So
yeah,
obviously, if you buy, say, a cheap oil and gas company, the catalyst is going to be, well, oil and gas prices have to turn around. Or like the precious metal stocks, these cheap juniors or small producers, we needed higher gold and silver prices, which has now happened, right? That's why a stock like Avino Silver has gone from $1 to almost $5, right?
yeah,
So,
yeah,
but like with Fubo was interesting, and one reason I was in it was I found it interesting that the company was so depressed in terms of price to sales, but it was growing at 20% a year, and they had this pending class action suit, or the suit against Disney and these other companies that were trying to do a sports streaming service that Fubo had actually pitched them on doing. And then they rejected Fubo, and then they started their own service called Venue. And even the logo looked like Fubo's logo of Venue, right? So it was like everything was a ripoff. And Fubo then did antitrust suit. Sorry, it wasn't class action suit against them. And so the catalyst I saw was like their business is growing. I think their debt is sustainable. And you know what? I think they're going to win this suit. And of course, instead of the suit going to trial, for those who don't know what happened, is they made a deal with Disney to now operate with Disney, right? So, and then that's one. And then when they made that deal with Disney, and Disney also gave them a big cash injection, which was great because it meant that Fubo didn't have to go to the market, do another convertible debenture, just raise money in equity, whatever it may be, didn't have to dilute essentially. So that could last them until they started making a profit. And Disney took a pretty big equity stake. So I think at some point Disney would just take them over, so.
Yeah, definitely. But I mean, these are the only companies that you've kind of found. We've had lots of success with precious metals companies.
Yeah.
Aftermath Silver, for instance,
Yep.
we got into the placing at 8 cents, went to $1.40, ridiculous returns.
Yeah, I think we wish
You
both
know,
wish we would have held to $1.40. I think we both
yeah, oh
sold
yeah,
short
that would have been nice. Yeah, I
there.
mean, but
So,
that's the
yeah,
benefit of hindsight. But even so,
yeah,
I was backing that this year, and I had 2.5x this year on it as well, just in the normal trade,
yeah, yeah,
without
yeah.
any.
Like I have another subscriber. He actually did the 25 cent placement that Aftermath did.
Yeah, yeah,
I think he sold it around 90 cents because I got out of it at 90 cents myself. Just my,
yeah.
my
I
position
was
on the
just a
market.
bit above. I think I was at 92. I was in at something like 56 and out at
Yeah,
92,
yeah, I was
something
in
like
around
that.
50 and I made about 80%. But like the reason I did it wasn't anything against Aftermath. I was just like I now I'm kind of rotating market money down.
Yeah,
And the reason is I like okay, like Aftermath that's had a big move and it is a nice leverage play on silver because it has a large resource.
yeah,
So but I was looking for something smaller that can go up 3-4x where I think Aftermath
yeah, yeah. It's had a good
and I was
run.
right. That was Aftermath in the 90s, started petering out a bit. And I'm looking for something else to rotate that into. And same thing with
Yeah,
these trades. Like we talk about GoPro, like GoPro is pure luck. Like I just looked, actually, I was doing, there's another stock we've been in out of called Brazil Potash Grow. And
yeah.
I actually think one time I typed in GoPro by accident, right? Instead of
And
Grow.
found it.
Yeah, and then I was like, "What? This is 80 cents now? This should be like $100 stock." And I remember this was like the hot stock in like 2014, 2015. I remember sitting at a
Yeah,
restaurant here in the Bahamas and all these middle-aged men were talking about the GoPro, IPO at the
yeah. The
time.
latest thing.
Yeah,
Yeah,
yeah, yeah, yeah. So it's kind of like shoe shine boy kind of thing, But anyhow, and then so I was like, I looked at it, and same thing. The price to sales is trading at 1/5 sales. They don't have a lot of debt, but the problem is they have a big cash burn. But I was like, well, if they can stop burning cash, this can go to sales. And then all of a sudden the thing jumps. And we're talking, we're all happy, like. And then I looked, and then you start looking at it, and it's like, oh, this is a mem stock now.
yeah. We got added to some meme ETF or something, and it was off to the
Yeah,
races, wasn't it? But
yeah,
that's
and
another one.
the short covering
Maximum
and
pessimism.
maximum pay, yeah. So, but it was cheap, and that was why it was easy to move. And the stock went from 80 cents to $2. I think actually it went to 250 ultimately. But I same thing. I got out around two. I was, and again, these were quick trades. Like a GoPro was lucky because I think I first did it in the spring, but when I did my second round of it in the summer, literally 3 days later was when that move started. I remember
Yeah,
that it was like in
yeah,
August.
yeah. It was.
Yeah,
Yeah,
yeah, yeah. So yeah,
that's what I like about your service that you provide. I mean, I've read several newsletters over the years. I've been an investor. I've been an investor, private investor since 1998, and I've read lots of different people's newsletters, and they never work. They never work because they're always telling you what they've done. And when you try and do what they've already done, it's too late. So you're getting out when they've already sold, and that's no good. Whereas your service, the thing I like best about your service is that you don't do in here, out there recommendations, follow me. You do ideas and you do
yeah.
your own trades and you tell us what you're doing with your trades. But it's not your service, I find, isn't a follow me service. It's for people who've got a bit more about them. They can make their own decisions and they can find their own trades within your ideas. You don't have to, for instance, you didn't have to maybe do some of the trades just with the stock. You could have bought some call options or some put options on them if you really wanted, and keep your positions smaller but obviously more return, because that's the way we can structure these things. So you're to me, you're an ideas guy, that picks out any range. Yeah, I think you don't care what you make money in, which is great.
Yeah,
That's
yeah, yeah.
great,
No,
isn't it?
like I said, like this. I was thinking about this year, and I'm like, this has been one of my best years ever.
Yeah, me too. Best year
And
I've ever had this year,
yeah,
definitely.
yeah, and it wasn't just because of precious metals. It was like I'm telling you, like we talk about GoPro. Market Watch went from 13 to 18.
BlackBerry.
American Eagle AEO went from 13 to 18. And remember, these things went to 13 to 18 like quick within a few
Yeah,
weeks or months,
yeah,
right? So like these were some of my larger positions because they're NYSE or American listed stocks, et cetera, et cetera. Market Watch isn't the most liquid thing in the world, but the other ones like GoPro and American Eagle are very, very liquid, right?
yeah,
So and again, it's like when I'm doing these turnaround plays, I'm looking for catalysts. So in terms, I mentioned what happened with Fubo, and the catalyst I saw with American Eagle AEO was, they're doing that. They did the Sydney Sweeney campaign. Then Travis Kelce's a famous, the guy who's dating Taylor Swift. They're doing a campaign with him too. So I saw these campaigns as a way to kind of boost their sales, which had been stagnant, right? And that's what looks like what's happening.
Yeah.
And it was a cheap stock, so it went from I didn't get in at 10, but it went from 10 to 20. And I bought around 13. Like I said, I sold mostly between 18 and 20. It's about $17 right now. And actually, the chart looks quite good. I might get back into it because they report in early December, and it looks like it might have like a second wave, right? I'd
Yeah.
probably be a
Yeah.
smaller position when I get back into it, but I might do some call options on it, and but I kind of want to wait until we get closer to that earnings date. So, but anyhow, that's what I'm saying. Like one of the key things is the catalyst. And like I said, like Steve, like there's a stock called Bohr.
Yeah.
It's an oil driller, and I kind of just it was going up and down and up and down, and I got out of it right about a flat trade. I think I bought it around 220 and sold it about the same level. And then Steve, like when the stock was it's $3 now, it was 270, 280. He's like, oh, Bohr's breaking out. And he was still in it and he made good money. So I'm like, yeah, that's great.
Yeah.
You don't have to sell just because I sell, you know, you know.
Yeah. Well, you've got some positions in there that you've talked about. They aren't all small, high risk, or just been beaten up over 30,
Yeah.
40 years. We've got Altria is in there,
Ultras,
which,
yeah, yeah.
that's done really well this year for a massive stock, huge market cap stock,
Yeah,
big dividend, out of favor sort of thing, but it's kind of steaming ahead just nice and slowly.
yeah,
So
yeah. It got whacked on its last earnings, but I actually say that in my letter. Like I got it in the low 40s. It's 57 plus the dividend. Like it's paying a
yeah,
7% dividend right now. If you take my entry price, it's closer to 10% on my entry price,
yeah,
right?
yeah,
And and I just tell people I actually want it to drop so I can buy more, right? And
yeah,
there's like a couple other stocks I don't own at the moment, and I don't mind talking about it again because like you'll have to subscribe to the letter to actually get the entry points. But like the India fund, which is obviously a play in India, and IRS, which is an Argentinian company. These are company they also pay big dividends, and I sold out. The stocks have dropped since I sold, and I'm looking to get back in. But that's that. It's same thing. Those are IRS is NYSE listed. It pays 11% dividend. So these are the kind of things I look at. And by the way, a lot of these stocks we're talking about, like MarketWise, like American Eagle, like Bohr, they have big dividends too. So if you're someone who just doesn't really care about the capital gains and you just want to get income, you could just buy these things and hold them for the dividends.
yeah, definitely.
Yeah.
Definitely. I mean, there's been other trades as well, haven't there? And that don't really get to the newsletter because of your private groups that you've got, if you like. As in, that's the other thing I like about you. You're accessible. A
Yeah.
lot of the other newsletters, you don't know who you're speaking to. You don't even know if they
Well,
exist.
one thing I realized doing this for 25 years is I rather have 50 or 40, 50 really quality subscribers, right? And then like 500 subscribers with 90% of them not knowing what they're doing, right?
Yeah, yeah,
So that's kind of the way. So I have a lifetime subscription. It's very reasonably priced. I think it's $900, right? And so I have a lifetime subscription. Plus, a lot of the guys who talk to me do these trades, they also tend to do private placements, and I get fees or a marketing agreement from the company for to help them out, and also because I got people in or like a fee for raising money. And again, those 40, 50 people are doing these deals, and you raise $300,000 for a company, they'll pay you like a 20 grand fee, right? So that's going to make me a lot more money too than trying to get, a whole bunch of subscribers for $20, $30 a month, right? And I'm honest with you guys, like you get in the deals, I'm like, look it, I'm getting a fee off this, but like I'm also putting my own money in at the same time too, right? I'm doing
yeah,
the
yeah,
private placement as well, right? So, and it's the same thing there. Some of the private placements people do, some they don't. And and like I know like the private placements I did in 2021, 2022 didn't do that great because gold turned down and the junior market was dead. But what I've made again this year in these kind of things has more than made up for it. And actually
yeah,
now I have
definitely.
we talked about aftermath. I have a different view towards the private placements now. I used to do a whole bunch of them just with like a small amount of money in each. Now I'm just looking to do three or four at a time with a larger amount of money because it's just basic math. If I put 50 grand into a placement, and it triples, I make 100 grand. Or if I put 10 grand into placement, I need it to go up 10x to make 100.
Yeah.
So
Yeah, they don't always work, do they? That's the thing.
no.
They don't always work. So you have to kind of pick and choose, I think, a bit more
Yeah,
rather than do them all, it's
yeah, I think I'm more selective now, and also,
yeah.
I'm looking for better management. I'm looking for maybe. I don't think I'm doing much, as many early staged type properties and type deals. Companies that are just kind of drilling. I like to see a resource, or maybe it's near production, and maybe the guys in management have a history of putting things into production, or selling a company. That's kind of what I'm looking at. So. And like you were talking about aftermath, one thing that reason aftermath worked too was, I had a property with a large, resource, and had a quality management team that had a history of like selling a couple projects in the past, and and it had a dirt cheap valuation. Like when there's another one I own called Regency Silver, and again, I don't mind talking about it because I've done marketing with them, and I've interviewed the CEO on the channel. And Regency, I did a 10-cent placement, and it's 18 cents now, right? It's up 80%. So, and at 10 cents, it only had like a $4 or $5 million valuation. And I always laugh because these guys are all based in Vancouver. I say like $4 or $5 million dollars Canadian barely even buys you a dump in Vancouver.
Yeah.
So you can buy this whole company for that, you know?
Yeah. Ridiculous, but good. Good
Yeah,
though
but
as
good,
well.
yeah. Well, for
Yeah.
example, they have 11 million ounces of silver in their resource, which is like for silver, that's small, right? Because silver obviously sells for a lot less than gold. But look at it this way, like they're basically selling for $1 an ounce silver, right? Their market cap
Yeah.
is about 10 million now. So
Yeah.
it's like $1 an ounce silver, and silver's trading at what? $47? Like, so
Great profit. Yeah. Great
yeah,
margin on it.
yeah. So
Yeah. But yeah, definitely the access to you that's been a bit of a game changer as well because you're an honest guy as well, and if you think something isn't going to work or you think it's a bad idea, you'll just say so.
well, the perfect
And it's
example is,
I
even though
like that as
actually
well.
it looks like it did reverse yesterday, was me and you have been in and out of this stock DDD. No, it has nothing to
Yeah,
do with breasts. It's the 3D printing company, right?
yeah,
I've been in and out, and sometimes I made money, sometimes I lost money, and it keeps missing on the revenues, the top end, and it keeps gapping down. But we were actually, it's funny, Steve was actually happy it was gapping down, even though we have long positions and call options on the company, because he was like, usually it gaps up and then fades. And hopefully, he was like, he even wrote me this yesterday morning when it did report. You're like, well, hopefully now it gaps down and comes back. And that's what it
and
did.
it
It
did,
basically
it did, it
finished
absolutely
flat
did.
yesterday.
Yeah,
And
yeah,
actually, pre-market today, as we're doing this on Thursday, November 6th, it's actually up 5 cents. So it's higher than where it was pre-earnings now, right?
yeah, yeah.
And
Even
and
though the earnings was a miss, and
yeah,
it
yeah.
got hammered in the aftermarket. I think it was down 17, 18% aftermarket at one point. And it just slowly creeped all the way back up overnight and then opened up slightly down. I think it was about 3 or 4% down when it opened.
And
It
longer
was about
term,
plus 2% in through the daytime.
And longer term, I'm still bullish on it because they just did this agreement with the Saudis to
Yeah,
3D print like military equipment, right? So
yeah,
at some point, and they're 3D printing car parts now too. So at some point, what they're kind of doing is like some of the old legacy businesses have died out on it. That's why the revenues are down, and they're replacing them with these new businesses. So it's like at some point, that is going to like turn it around. And actually, the Saudi pension fund, one of the funds there, took a 30% interest in the company. And what's great about that is that means they're never going to go under, even if they have cash
yeah.
burning
They've got
problems. Like
funding, they've got a backer now, haven't they?
they got
Because it,
backing now. So yeah. So and again, we talk about price to sales. They're going to do roughly, I don't know, 400 million in sales this year, and the market cap's 330. So I always like a turnaround play that's trading at a discount to sales.
yeah, another good one. I mean, there've been another good one in and out over the times. I mean, it doesn't go up in a straight line, definitely, and it does get hammered at various times. But when it's all priced in anyway, when all the bad news is already in there,
Yeah.
then where's it going to go? It's either going to go bust or go up, isn't it? And that's the way it goes.
Well,
Which which is
one
that's
of
where
the
the
funniest
research comes in.
ones is grow, because I know you've been in that too, in and
Yeah,
out.
I have. Yeah,
And
yeah,
this stock is for people who don't know, Grow is run by Stan Bart. He's actually a friend of mine. And I've made money in Stan's deal. Stan sold Consolidated Thompson and Desert Sun Mining to majors. And I think he sold Consolidated Thompson, I think, for 4 or 5 billion to Cliffs. Way I think it was like 2011, right at the top of the resource market. And anyhow, and I figure Stan maybe made 800 to $1 billion Canadian off that, right? And at that time, Canadian dollar was par, by the way. So, but anyhow, so Brazil potash is this huge potash development in Brazil, but it's in middle of nowhere in the jungle, and they need all the infrastructure, and it's going to cost a ton to get this thing in. But then once it's in production, full production, it's a cash cow. And so anyhow, the stock collapsed. It IPO'd at $15 last year, about this time last year. It collapsed to like almost $1. And then like basically it's been trading between about $2 and $3 the last few months, but it's wild. It will gap up 15, 20, 30% and then fall 20%. And it trades as a huge amount of volume. Like the average volume on it is 1 million shares a day. And they only have like 50 million shares out.
Yeah,
Right. And
crazy.
yeah, I think some of the days, some of these heavy volume days, it's traded like 40 or 50 million. No, it's traded. One day it traded 34 million shares. So it traded 70% of the float one day. So like anyhow, it's kind of a wild stock. And if you're a day trader, like I don't day trade, you could probably get in and out of this thing as well, too. So that's what I'm saying. Or I think what Steve's saying with me giving ideas is I could talk about Brazil potash and not be in it, but if you want to trade it, trade it till like till the sun comes up,
Yeah,
So
yeah, yeah. It's definitely got the volatility, growth, definitely.
yeah. Yeah, and if
Plus
you
all
can
the
get
potential for the future, that's a
yeah.
great thing about it.
Yeah, and if you want to own like a core position, you can do that as well, right? Because I
Yeah,
do think my issue with Brazil potash right now, I still like it, is longer term is that they're still too far away from production. So if you really want that longer term position for the growth and the revenue coming in, I think you can be patient and wait till like, I figured like the production will come in 12, 24 months. So
yeah,
you buy it as you get closer to that as well.
yeah. Man,
So
he's saying that it'll probably be $7, $8 by then, won't it? Then that's the other thing, because the
yeah,
market will know that they're getting close to production
production,
and
yeah.
price it in.
Well,
So
another thing we do too is we short, right? So
yeah,
one stock we did really well on recently was CarMax, KMX.
yep, yep,
Yeah. So for those who don't know, that's like a car seller. Actually, it's down another 10% pre-market. I'm not shorted anymore, right? But this thing gapped down like 30% on earnings. And I think I made about 3 or 4x on the puts. I think I made 3x. I don't know what you did, but this was and actually
yeah.
this came from this trading group we have, because we have one individual in the group. His name's Eric. He's one of my subscribers as well. And he's really, really knows the car industry in the US. And I know that because I've been short CarMax in the past. I was like, well, he was telling us how the industry's slowing down. There's obviously a lot more repos going on. There's the sales are slowing. So I was like, I think CarMax is a good way to play it. And the options weren't expensive. So you can,
Yeah, I think I delayed a bit on that one. I didn't. I think I saw the trade and I thought, I'm not so sure about this, and I delayed. But I did go. I did buy the puts, and I think I made about 144%, something like that on it. Just
yeah, it's
looking at the
great.
trades, which is good. That's fantastic. And yeah, with Eric, he's sort of got all his insider knowledge. Likes wandering around his dealerships on the weekend, which I think is quite funny.
It
But
is funny. Yeah.
he goes and talks to the sales guys, and he knows, doesn't he? His boots on the ground for us, which is fantastic.
Yeah,
I
yeah,
like
yeah,
that.
yeah. And like I said, I don't really, obviously living on this island, I don't know much about that industry. And actually, I'm even used to my advantage. I told Eric is that, we're big American football fans. He lives in Texas, he lives in Austin. I told him, hey, next year I'm looking because I'm sick of buying these kind of used cars on the island and then breaking down and whatever. So I said, look, I want to buy like a brand new RAV4 or something, right? And then just drive it from Texas to Florida and put it on the boat here. And
Yeah,
Eric will probably get me a good deal there, and we'll go to a football game or whatever. So,
good stuff.
well, he had a really funny video. This is kind of segueing out of investing, where yeah, I don't know if you know Alex Jones. He lives in Austin, right? This conspiracy.
Yeah, yeah, yeah.
Yeah. So Eric
The
was
news
like,
guy.
yeah. Eric was like, she's I saw Alex Jones yelling at a bunch of like leftist protesters, about
Brilliant.
Elon. And then he showed me the video, and he's like driving. Well, he showed me the video that Alex Jones posted where he's there and he's got
Yeah.
a megaphone and he's yelling at people. And then Eric's like, see that I think it was an Escalade, Eric, if I'm wrong, sorry. He had like a big black Escalade. You see that? That's me driving by.
Brilliant. I like it. Good
So,
one.
so anyway, I don't know if you want to say anything else. I think we talked long enough. Like, I'm not sitting here like you don't have to promote my service, but just talk about just quickly about yourself. Like,
Okay, well, we kind
No,
of
I mean, turn what kind of trading that you like to do, and and the whatnot.
yeah, well, I've got a mix really. I like a few core positions. I run a personal private portfolio of about 20 positions at any one time, probably no more than that. And it's a mixture of maybe four or five longer term dividend plays, which they're just like the base, if you like. And then I'm like you, I'm looking for, I might do the odd placement here and there. Some of them work out, some of them don't. Some you end up with the stock for ages. But then if you're in the warrants, then you might have 3 years for it
Yeah.
to actually play out for you. So that's fine. And then the rest of the portfolio, like looking for trades that are undervalued, really. Because I started off life as a value investor, did really well in the early 2000s, got hammered in the great financial crisis, but who
Of course.
didn't?
Yeah, I know, I got
You
hammered
know,
too. So,
yeah, I think all private investors did, didn't they? Because there was nowhere to hide. But anyway, but learnt from it and then decided, well, value investing, that's kind of a way to go, but I've got to do it differently and look into different companies and where the value is, not just going off the usual metrics. And that's where I found newsletters like yourself. Like I said, I've had several others, but I've stuck, yours is the longest one I've stuck with by a long way because I like the way you trade and I like the way that you find companies and you're not just like a resources or a tech guy or a crypto guy or whatever. You do a bit of everything. So and I like that because I'm the same. I'd like to make money in anything, really.
the perfect example you're talking about warrants is I don't know if this might have been before you were really doing placements, but I one of the first placements I did because I realized I can make a lot more money, like I said, raising money for companies and helping companies out than
Yeah.
just selling letter subscriptions. And I had built up, a clientele over years as I was in Wallbridge. And I don't know if you remember this, but this is one of these stocks, kind of like Aftermath, and went from about
It was 5 cents to like $6 or something, was it?
no,
Something
5 cents to about a
ridiculous.
buck 50,
A
right?
buck 50, was it right? Yeah.
Yeah. And so I had these warrants at 8 cents, and they were actually like broker warrants. So like there were warrants I got for raising money for them, right?
Yeah.
And just for anyone knows the legality of it, being offshore, I have a lot easier access. I don't have to be registered to get those kind of things. Like if I was living in Canada, I'd have to be like a registered, financial and analyst or broker or something like that, right? But anyhow, so I had these broker warrants, and I can't remember how many. I think I had like 50,000 or something. And then all of a sudden, my broker wrote me one day. He's like, "Hey, you got these Wallbridge warrants? This." And it was literally like a month before they were expiring. The stock's like 30 or 40 cents. And, they said they're 8 cents. I was like, wow, exercise it and sell it, And
Yeah.
like those, like I said, were like kind of broker warrants. But like when you have, and that happens, has happened to me in the past, you have these warrants in a company and all of a sudden the company spikes, right? And you're kind of like, well, I can sell this now. I can exercise
Yeah.
the
Yeah.
warrants and I've made 3 or 4 times on your money, even though I may have sold the stock. And
Yeah,
that's why I like to
exactly.
do private placements because especially now in the bull market you're in, if you're like, okay, like I use that Regency. I don't plan on selling it, but let's say I'm up 2x on my money in Regency and I'm kind of like the warrants are 20 cents, by the way, on that 10-cent financing. And I decide, oh, I'm just going to sell Regency at 20, 25 cents. And then let's say the stock goes to 50 cents on good drill results or something. It's like, well, I can exercise the warrants at 20 and still make money, right?
Yeah.
So,
And you've got your capital back out, haven't you, to do it again with something else?
yeah,
You know,
yeah.
that's a good way of doing it.
Yeah, and then also you can do something like the reason how I bought my house in the Bahamas was I had a private placement called Tinka. So I bought a 10-cent financing with the 15-cent warrant, and the stock went to about 50, 60. I went to about 60 cents. So I only had 100,000 shares, but um, so that was worth 60, right? Well, then what I did was I just sold a quarter of that, stock at like 60, and
Yeah.
then I could rotate that back into the warrant at 15, right?
Yeah.
So I'm
Yeah.
just
Yeah.
recycling the money. I'm not even using new money. And then all of a sudden, that's like the quarter is like I sold 25,000 shares. So then like I had 175,000 shares at 60 cents. And I remember because you're talking about the financial crisis, is I think I'm a little bit younger than you. Lost my ass, and I'm kind of been a bachelor my whole life, but but I remember just having a bunch of crappy junior mining stocks that crashed in the financial crisis, and I was like, I want a house. And in 2011 was essentially the bottom of the North American housing market. Probably was the bottom in the UK too after the financial crisis.
Yeah.
And I actually yelled at my broker. I said, "You sell that 175,000 shares at 60. you wire that money into my account because that's the down payment for my house.
Yeah,
You
that's the way to
know?
do it. That's the way to do it.
And the brokers don't want to sell, but I was very. And by the way, then the Canadian dollar was par, so it wasn't like that
Yeah,
110 was like now that would be like
50,
75,000.
50, 70,000, isn't it? Yeah,
Yeah, yeah. Well, now that 110 was 110 US.
yeah. Good stuff. Good.
So anyhow, yeah, actually, one of the nicest emails I ever got, I don't know if I'll ever have this guy on the show, was a guy, he lived in like New York and New Jersey, and he lived in kind of a crappy area. And he did one, I don't know if he did one of the placements, but he just bought one of the juniors. And
Yeah,
I think it was Aftermath. And he sold it, went from 8 cents to 50 cents. And then he put the proceeds into another company, not the company I recommended, but a different company, and then that went up 2 or 3x. And then he told me that money that he made gave him enough money for down payment for a house in a nice area in Florida, and he could get out of this crappy area he was living in the Northeast that was had a lot of crime and was depressed and stuff. So
yeah,
weird
yeah.
stories like that, it makes you feel really good, right? You change somebody's life.
Yeah, because a lot of services aren't interested in what the clients are actually going to make. They're in it for the fees, aren't they, for themselves? Because they
Yeah,
want
yeah,
another round of golf on the course, sort of thing. Whereas you're not like that. Because we're a small group. Then we
yeah.
kind of know each other, and
If
sorry,
you
go on.
saw the little money I made off the newsletter, you would probably be like, "You're an idiot to even do all this work."
A lot of work. Yeah, a lot of work for no return.
Yeah. So,
Yeah,
but no,
but
it's
yeah,
like,
but
I get to meet people like yourself, and then, like I said, like the potential, the other revenue. That's not why I'm in it, but like a lot of these guys like to do the placements, and I get fees out of that. So there's a whole bunch of offshoots, and then also. Actually, another reason I think me and Steve became friends, what has ended off on this note, was that Steve lives in Leeds, and my father was born in Leeds. And he's actually met my father and my stepbrother, right? And Steve, one time I was there, we were just pub hopping, and he was showing me all these historical areas of Leeds. But when I saw Leeds at the bottom, I still remember, of your email, your address,
yeah,
is I'm a huge Leeds United fan. So we probably talk football half the time as well.
yeah, we did. Getting drunk in the old Victorian pubs in the town.
Yeah,
Yeah,
that was fun. That was one of the funnest days I've ever had, by the way. And Steve
excellent,
actually
good.
took me to this bridge. Maybe we'll do a subscriber tour of Leeds. Bring if
Yeah,
anyone wants to come. And he took me to a bridge where you told me it was the first ever a film was shot there,
yeah. First
like
motion
motion
picture
picture.
in the world on
Yeah.
Leeds Bridge, which was literally about 100 meters away from where Leeds United football team, or the soccer team for your American subscribers, was reformed in
Yeah.
1919 at a Salem chapel there. And I took you there as well. Do you
You
remember
took me
that
there as
trip
well.
to
I
the
was going
Blue
to say that.
Plaque? And
Yeah.
yeah, so there's quite a bit of history in Leeds, but you've got to look at it. As in you've got to find it. It's not so obvious because there's quite a few new buildings. But yeah, it was good fun. We have to do it again sometime.
Yeah, well, it's become pretty gentrified. Like when you're on the little canal there, the kind of river,
Yeah,
and where it used to be probably all industry and textiles,
yeah,
it's all yuppie condos and stuff like that now, which is
yeah,
good.
yeah. They are now.
And actually, it was interesting. Last thing enough of Leeds, I was watching one of the food vlogs that I watched, and the guy lives in Leeds, and he was noting that and I know you can tell me if this is true. Like Leeds has a lot more economic activity going on than a lot of other cities in the UK right now. Like there's a lot more construction, buildings being
There
built.
is. Yeah, it's
Yeah,
still being built. I mean, it had a big boom in the 90s, the 1990s. There was a lot of financial institutes moved there, their offices. They've kind of dwindled now, but the government built a massive building and they moved the whole department up to Leeds, which was the first time they'd ever done that outside of London. So it did have a lot of money invested in the 90s. And then it kind of went, but it's slowly coming back. It's slowly, but it's different economically at the moment.
well, the one thing I liked about Leeds a lot, two things. I'm not a huge city guy. Like if I go to the States, I rather go to like New Orleans over New York, right? I like smaller like places.
Yeah.
So I
Yeah.
preferred Leeds to London in terms of the size of it. And then
Yeah, it's
also the
quite
real estate
compact.
prices I found were pretty reasonable, right?
Yeah,
Like,
they are.
yeah,
Yeah, yeah,
yeah. Like London is like, like a flat is a million, 2 million pounds or something, right? So,
yeah,
and in Leeds, you could buy a nice house for, especially in say the suburbs of the city, like for a pretty reasonable price.
yeah, definitely. And it is compact. It's a compact city. You can walk everywhere.
Yeah.
You don't have to jump on public transport. I mean, we as a family we went to Amsterdam in the summertime,
Yeah.
and really to get anywhere, you were jumping on a tram for 15 minutes. Well,
Yeah.
if you jumped on, we don't have a tram service in central Leeds, but if you jumped on a bus, say 15 minutes, you'd be 5 miles out of the city centre. You know, you'd be miles away from it. So it is compact, which is plus point.
Well, I
Means you'd
think
have to stagger too far between pubs, so you're all right.
well, I think they're gonna when they redo the stadium, Ellen Road. I think they're gonna put a lot of like restaurants and bars around it. They're gonna really redo it into
Yeah.
almost yeah. So it looks like it's gonna be, and I think they're gonna expand it to 50,000 people as well, if I'm correct.
Yeah, hopefully. Hopefully. It
Hopefully.
needs to be. It's an old, one of the stands was built in the 1950s and it really needs updating.
And by the way,
Yeah.
if anyone's into this sort of thing, it's ironic because I'm a Raiders fan in NFL football. Is that and the Raiders are known for having the most rowdy, crazy fans. And if you're into that sort of thing, Leeds fans are like that too.
Yeah, they are passionate. Definitely.
Yeah, and hopefully we don't get flagged. But like, I was watching one of the the fans who do those highlights, and I couldn't stop laughing when the Leeds fans. I guess it was the game against West Ham. It was a Friday game, so it was like nationally televised, right? And they were all chanting. I guess Gary Neville was there. Was they're all chanting Gary Neville as a wanker?
Yeah, definitely. He was complaining about people putting flags up, national flags. So, I
Yeah.
guess he asked for that. But he did play for Man United,
I know he
who
played for,
were
so he's, oh,
big,
that's the two things. Like you can't.
yeah, big rivals to Leeds, something to do with the War of the Roses or something,
Yeah,
going
yeah.
back a long, long
What's
time.
funny,
So,
what's funny about it, maybe living thousands of miles away, just to again finish off on this note. I don't even really hate Man U because I don't know. I guess I don't live there, and it was never a thing to me. And for most of my adult life, Leeds were like in the lower tier division, so they
yeah,
didn't really have that rivalry. So
yeah, yeah,
like
yeah.
I would hate something like Sheffield Wednesday more than I would hate Man U. You know, like,
Yeah, brilliant. Like
yeah.
it.
Yeah. Okay, man. So thanks for being on. And yeah, in the future, maybe we'll we could do in the future because you are very knowledgeable about economics and the whatnot. Maybe in the future, come on, we'll actually talk about maybe more of our outlook,
Okay.
on
Yeah,
where
yeah, I'd
things
love
are
that.
happening. Yeah,
Yeah,
yeah.
that'd be good.
And you can
Yeah,
maybe
well,
even talk about things like, because I like to talk macroeconomics on top of trading, like what you think about the UK economy and political climate. Like, I don't want a cop coming to your house. I know the way the UK is right now, but
yeah,
but no,
definitely.
we
Yeah,
could
we'll have
just
to keep it quiet. Yeah.
keep it quiet. But just more talk. I would like to talk more about the economy and the whatnot.
Okay.
Yeah. Okay. So anyhow, it was great to have you on,
Yeah, it
and
was a blast. Thanks for having me on.
yeah. So yeah. So oh, and by the way, one last thing I'll tell you. Last funny thing about Steve. All he did was tell me about is how terrible he was in school when when he went to he's got a pretty good job as well. And he was like, I was like a D student, blah blah. And I was like, damn.
Failed everything.
And then I was like, he's done pretty well for himself.
Wouldn't recommend it, but yeah, it worked out in the end.
Yeah, yeah.
Worked out in the end.
Okay, thank you.
Cheers. Thanks, David. Bye now.